JJ, how are you doing, sir? Awesome. So Tiger Boats has been in business in Abilene, Texas since 1995. Tiger Boats sells to boat stores around the world. A representative for Boats Incorporated, the largest chain of boat retail stores in the United States, approached the owner of Tiger Boats, Bill Bird, interested in purchasing 1,000 boats for $12,500 each. Am I reading fast enough? Not yet? You want me to be a little faster? The largest previous order was 100 boats, so this large order requires special consideration, hence it is called a special order. Us accountants, we're just so creative. The $12,500 offer from Boats Incorporated is much less than Tiger Boats' normal selling price of $6,000 per boat. $16,000 per boat. I hope that's what I said. In fact, the boats cost $13,000 to produce, so the company would lose $500 per boat if it accepts the offer to buy boats from Boats Incorporated. Now, really what's going to be really what I want you to look at is the per unit information. Okay, that's really where the rest of the information is kind of there to distract you just a little bit. So let's look at the per unit information. Should they accept or reject this offer? Because what it shows there is, because I just read off this $13,000 number, but in that per unit information, it tells you how that $13,000 was calculated, okay? It does. So Kaylee, what do you think? Should they or should they not sell boats for $12,500 a piece? Yes, they should, or yes, they should not? Yes, they should. Yes, they should.
Or no.
You don't. Whitney? Can you help? Do you think they should or should not?
I don't think they should.
You think they should?
Yes.
Why?
Said so.
Because what?
Because it said so.
Because it said so.
Because I said so.
Because you said so. But can you give me a number?
No.
I want a number. Austin, you got a number for me? Jennifer? Well, I just want to know yes or no, and give me a number to tell me why. What numbers are you comparing?
They should, because they'll lose $500.
You do not think they should because they're going to lose $500. Now I would ask you, and that's precisely the format I was hoping for an answer. Okay, that's precisely the format I was hoping for an answer. But I would ask you, are all the costs that add up to $13,000, are all of those costs relevant? It's one or the other. Which one's not relevant? Yes. Because you shook your head no. I was looking right at you, and you said no, they're not all relevant.
The fixed costs?
Fixed costs are not relevant. Are they avoidable? Are fixed costs avoidable? No. Will they change? If we produce more or produce less boats, will fixed costs change in total? Nope. So remove 1,500 from your calculations. So what is the relevant cost of making a boat then? Mike McGee? How much? 11,500. How much are they offering to pay us for these things? 12,500. Would we make money if we did? Yes. Smiley face. And in your notes, she doesn't have any, and I bet she's not the only one. Right, you're comparing 11,500, which is the sum of those per unit costs without the fixed costs. And we're comparing that to the 12,500 that we are being offered. Okay, so make sure that's in your notes. Don't have a blank space there, okay? Questions, comments, concerns, random thoughts? Are we good? What's the name of that number? Yes, sir.
Well, I mean, still don't understand why they should, because don't they normally sell them at $16,000?
Yes, they do normally sell them at 16,000.
More money selling at 16,000.
Yes, they would, but would they make more money? But that's not our decision here. Our decision is, will we make more money selling them for $12,500 or not sell them at all? Because think of Boats Incorporated as kind of the Walmart of the boat selling industry. Does Walmart get price discounts from the people? Absolutely. That's how they sell them so cheap. And so that's really our decision now. So it's not, do we sell them for $16,000 or $12,500? That's a no-brainer. You know, here though, we've got a special situation. They want a bunch of boats, and these are extra sales. These are extra sales. We're still making all those other sales. These are extra sales. They're going to buy more than anybody else has ever purchased from us before. Are we willing to let them go for a little less and give them a special deal? Yes. And so that's really our decision here. But of course, we'd rather sell them for $16,000. Of course. Ooh, yawn. Now, what's the name of that number, that $1,000 that we calculated? It's got a name, accounting name that we know. What is it? If we take 12,500 minus 11,500, that equals 1,000, and it's got a name. Contribution margin. What did you say?
I had said net income before tax.
Netting, no, so it's actually right financial statement, but it's actually contribution margin. Revenue minus variable costs. Because variable costs are typically relevant costs. Right? Okay. Apple appliances. Apple appliances. What kind of a problem is this, Melissa? Make or buy. So what do you think the decision is? Whether we make them or buy them. How about that? So you are the production manager at Apple Appliances, a company that produces convection ovens. Does anybody know what a convection oven is? Not a microwave. Huh?
It's an oven with a fan inside that circulates air.
Yeah, it's basically a toaster oven. Okay, kind of
Supposed to heat more evenly.
yeah, it heats more differently, but it's not a microwave. Definitely not a microwave. But it's kind of a toaster oven, kind of a big, kind of a little portable microwave-sized oven. Okay, so that's what but the technology is very different. But microwave size, a little smaller than a microwave, but bigger than a bread basket. But nobody anymore knows what a bread basket is. Do you? Okay.